Hello everyone, welcome to this webinar on digital transformation in wealth management, in which we'll be exploring how technology is satisfying the needs of affluent people of all ages. It's been organised by Ditto, the marketing, business development and communications company based in London and Dublin, and Comarch, one of the leading software houses in Europe, based in Krakow in Poland. And this webinar is the second of two webinars on the digitalisation of wealth management and private banking. My name is Michael Imson, and I'm a senior content editor at Financial Times Live, which is the FT's conference division. And I'm also a chartered member of the UK's Chartered Institute for Securities and Investment, the CISI, and the deputy chairman of the CISI's FinTech Professional Forum. Now, joining me for this discussion are three experts on the subject. First, we have David Derenick, who is first vice president for Central and Eastern Europe, Corporate Innovation and Analytics at UniCredit, which is Italy's biggest banking group. And David is based in Vienna, Austria. Then we have Dominic Lizwa, who is a business consultant at Comarch and is based in Poland. And last but not least, we have with us Carol Ward, who's Chief Operating Officer at Man GLG, the discretionary fund management subsidiary of Man Group, one of the world's largest independent active investment management firms. Carol is also a member of the Man Group Executive Committee and is based at the company's London headquarters. Now, I'll just say a few words about the topic. Wealth management's a very healthy sector of the economy as the rich get richer and more people join their ranks. According to Credit Suisse's latest Global Wealth Report, aggregate global wealth rose 2.6% in the 12 months to mid-2019 to reach a staggering $361 trillion. And what's more, another 1.1 million millionaires were created in that period. 675,000 of those in the US and an extra 150,000 each in China and Japan. At the same time, wealth management's becoming more technology oriented, including the client-advisor relationship. High net worth individuals enjoy using digital tools to manage their wealth. And of course, personal contact with advisors remains important. And this love of technology is not restricted to the young, it's been embraced by clients of all ages. Anyway, the format of this webinar is simple. First, I'll ask each of our panelists to introduce themselves and tell us about their job roles. Then I'll ask them a few key questions, and listeners, you'll be able to ask questions via the webinar site, so please do send some in and I'll try to get them answered near the end. There's a section on the site which explains how to send in questions, and then finally we'll wrap up with some concluding remarks. So the whole thing is going to take about 45 minutes. So let's start with David of UniCredit. David, can you tell us about yourself, your job, and your interest in the topic of this webinar?
Thank you, Michael, and hello, everyone. So first of all, let me thank you for the invitation to this webinar, and it's really a pleasure to share with you a few thoughts from my experience. I'm currently steering innovation and analytics in corporate banking in 10 countries of Central and Eastern Europe in a UniCredit. However, for past 8 years, I've been heading the investment products, innovation, and digital in the Central Eastern Europe in UniCredit Private Banking. So in this journey of private banking and wealth management, we implemented a CRM, a Robo advisor solution, and content management system for relationship managers in 6 CEE countries, and freshly also client Robo advisory solution front end. So let me also proudly share with you that we have been recognized by PWM magazine from Financial Times as the best private banking in CEE for Robo advisory services in 2018 and best private banking in digitally empowering RMs in 2019. To be fair, part of this success belongs to Comarch. So during my digital journey, we learned, of course, many lessons learned. We also understood how to approach our clients in digital way. So it's a pleasure to share with you our experience and view on digital.
Thank you, David. Dominic, tell us about your role at Comarch and your take on the digitalization of wealth management.
Yes, good morning to you all. My name is Dominic. I'm a business consultant at Comarch. So I've been working at Comarch for 3 years now, and I'm responsible for a product called Comarch Wealth Management, which is software which helps advisors and clients to meet their needs in terms of wealth management service worldwide. And before I was a business consultant at Comarch, I worked on capital markets. So I was a stockbroker for one of the Polish banks, and then I became a portfolio manager in one of the investment funds. And for today's webinar, I'm planning to share some insights regarding not only the technology company view, but also the capital markets view. So I believe to bring some insightful knowledge on the topic as well.
Thank you, Dominic. And Carol, what does your job entail, and can you give us your views on the topic?
Sure, no problem at all. Pleasure to join today. So Michael, as you mentioned, I sit within Man Group. Man Group is very much in the asset management space rather than the wealth management space. To be clear on that, I guess from the outside. So our job is really fund management. However, even though the Man Group business is predominantly institutionally focused from a client-based perspective, where I sit within Man GLG, actually a significant portion of our client base, so 40%, is through the retail channel, predominantly coming via wealth managers. In my role as the COO of that business, there's two main aspects to my role. One, the day-to-day running of the non-investment side of the business, and then secondly, helping to drive the growth strategy for the business. And a key part of that is looking at how we can apply technology and innovation. In terms of my interest in this topic, first of all, I think it's important for us in the asset management space to understand the changes that our clients are going through, and therefore, keep an eye on trends within the wealth management space, and therefore how we may need to adapt to that, and adapt to our client needs. Secondly, I think there's some parallels between the change and digitalization that's happening in wealth management, and also some of the changes that we're seeing on the asset management side. So when you look at the client experience, the continued need for client relationships, but then enhancing that through digitalization, and also the role of the advisors in terms of how you can enhance their capabilities through technology on portfolio analysis and areas like that, then there's definite parallels. And then finally, I guess I have a strong personal interest in this area. My background is in technology. Outside of my day job, I do fintech mentoring, and have a healthy enthusiasm for all things tech and innovation. So hopefully that's the angle that I can bring.
Fine, thanks, Carol. Just as an aside, I wonder if you could give us an insight into the geographical reach of what Man GLG does, because we heard from David, he's focused on Central and Eastern Europe. Man Group is a global organization. So Man GLG, on the asset management side and the wealth management side, where are most of your clients based? Is it Europe or is it global?
So it's definitely the case that we have a global client base. So from a Man Group perspective, we touch all aspects of the globe. From a GLG perspective, actually, our client base is predominantly EMEA, and our kind of retail and wealth client base is actually predominantly in the UK, but throughout EMEA as well. So in particular, we've been quite UK-centric in that space and have a very strong UK client base.
Yeah, fine. Thanks for clarifying that. And thank you, all three of you, for your introductory remarks. You're involved in some fascinating work. So let's move on and get right to the heart of the subject. Millennials, these are people born in the 1980s and 1990s, if you needed to be reminded of that. They're taking a much bigger share of the wealth management market as they get older and wealthier. And they tend to be more technology oriented than older people, or at least that's the perception. It might not actually be that true, but that's my view of it. So the millennials are becoming important, but even so, older generations, Generation X, baby boomers, and the silent generation, they still hold most of the wealth. So, David, do you think that if wealth managers focus too much on digital channels at the expense of the personal touch, they might satisfy younger clients, but could alienate the older clients? So how do you strike the right balance?
Maybe before answering this question, let me share the overall approach we have within the private banking. So we believe that the private banking for now and for upcoming years should stay high-tech and high-touch business. So therefore, the human touch should stay the core part of the service, However, should be well supported by digital capabilities, especially in area of investments, portfolio management, optimization, and portfolio notifications. But the RM plays, in our view, key role of the proper understanding of client situation, the client calls or needs. So this is how we look at, let's say, bringing the digital to the wealth management and private banking space. Touching the part of older vis-a-vis younger clients and alienation, prior to implementation of our client front end, we definitely looked at the view of our clients. So what we did, we ran the survey where we asked almost 700 clients in 6 countries, which aim to understand the readiness for the new channel, to understand the readiness for less advanced functionalities, more advanced functionalities for robo advisory services, but also to understand the differences across the wide range of client personalities. So we asked all types of clients, the younger ones, the older ones, the clients which are, let's say, more tech oriented, the clients which are less digital, the clients which are having quite huge portion of their portfolio in investments, or the ones being quite conservative and sitting mostly on cash. So we looked at their needs and their let's say, preference and willingness to do investments through the digital channel. And in this survey, a part of other findings, we surprisingly found out that older clients in all C countries were more keen to use digital capability to steer their investment portfolio comparing to the younger ones. And of course, this surprised us. So we immediately started to investigate how come that the older clients answered more positively to use the digital for management of investments in their portfolio. And after the investigation and deep dive, we realized that the older clients are more often wealth preservers who typically already sold their business, and they have more time and willingness to check and optimize their portfolio. So they are more ready to use the digital. And even though they are older, they are already used to use digital for communication with their grandchildren, because sometimes it's the only way how they can communicate is through the different social media or chat platforms. So their readiness is, let's say, they are much more ready than we thought of. And comparing them to the younger ones who are often busy with their business, they very often still are managing their business, and they have a bit less time to check their portfolio, to optimize their portfolio, to have this day-to-day checking and looking and discussion with the relationship manager. So even though the ratio in both cases of readiness for digital was quite high, but we didn't see the correlation, or we didn't see the difference between the older or younger clients, and vice versa. We found out that older clients in our case were even more ready and willing to use the digital in wealth management and private banking.
Yes, that's fascinating. It's almost a myth then. You've busted the myth that older people are less digitally aware.
Honestly, we've been also surprised, but when after deep dive, we understood what's behind. And as I said, the older clients, they typically sold their business, so they are sitting on the cash, they want to invest this cash, and they are having even more interaction with their private banker than the younger one, which typically are taken by their business.
Yeah, fascinating. Dominic, same question for you then, bearing in mind what David's just said. How do you get the right balance between digital channels to satisfy one particular group of clients, who might be the younger ones, and the satisfying the older clients, or the ones who are less digitally aware?
Sure. So I've been working for Comarch for several years now, and I have to admit that there is a case where financial institutions or our potential clients are a bit afraid that introduction of new technology would somehow weaken the relationship between the older clients and the institution, right?
Mhm.
So I see this case very simply. I see that when you introduce new technology, you may do one of two things. You may either help your clients, or you may help with technology your advisors or the employees in general. And unless the introduction of new technology for one group does not do any harm for the other group, it's all good. And let me give you some example of that. Recently, a couple of days ago, I had a problem with Uber with one of my journeys, and I wanted to go to their website, find some phone number just to call a guy and fix it. And actually what I came across was very different, because I went to their website, I started looking for a phone number, and I haven't been able to find it. So I went to the help webpage, then I had to scroll over many frequently asked questions, then I had to confirm that my problem is not on the list. And then after a few steps, I got into the contact form, which was text only. So I was a bit disappointed that my problem wouldn't be solved right on. Instead, I had to write some message and wait for the answer a couple of days. So in my opinion, this is a great example how the introduction of technology on the employee side, we're able to upper the margins or lower the amount of people required for the customer service. However, from the client perspective, I wasn't satisfied with how the whole process went. So I would suggest that the new technology should solve some problems without creating new ones. And referring to what David said, I completely agree with what he said regarding the introduction of technology to older clients, because I see also the phenomenon of consumerism in new technology, because banks and financial institutions, we have to say it, are rarely innovators in the field of technology. They are rather followers who would like to take the technology from other services, from other sectors, and introduce them later. Therefore, I believe that clients are already using the technology that banks or financial institutions are trying to introduce at their companies. So there is a high probability that they know the technology and they wouldn't be afraid of it. So I'm completely, not surprised with what David said regarding older clients embracing new technology.
Yeah, what's happened since the invention of smartphones is there's been a sort of merger of corporate and consumer technology, hasn't there? So the two are becoming very similar. Carol, what's your take on this then? And I suppose in the question is younger clients versus older clients, it should possibly be less digitally aware clients versus more digitally aware clients, because it seems age doesn't come into it.
Yes, yeah, I think that's very interesting, actually. I think from the lens that we have, it feels that that a lot of wealth managers are looking almost at an omni-channel approach and looking at reaching out to different clients in different ways, frankly, and trying to find ways to use technology to enhance the kind of traditional client relationship. Again, that's something that we see filter through to our world in the asset management space as well. When we are sitting with our clients and speaking about our funds, what we are trying to do, and again, I think it's a similar experience, is making it almost a more interactive experience where we're using technology to provide enhanced reporting and analytics, provide an in-depth view of the portfolio, for example, looking at how it's performed over different periods. And really technology can play a really key role in enhancing that experience and providing a more enriched and high value experience to clients. We also, and again, I think this is another parallel, see increased demand for clients for enhanced transparency and reporting on their portfolios. And again, the digitalization in the wealth management space plays a key role there. Almost tying in, actually, David, to the aspect that you're saying, the ability for clients through different channels to be able to access their portfolio and seeing how it's doing makes complete sense. And then the role that the advisor plays on top of that is obviously very critical as well. I think one thing that is interesting that is potentially more of a millennial culture, although I do think it is something that spans generations, frankly, but something that we're seeing, again, in our space that I think is kind of starting to come through in different aspects in wealth management is the drive for people to have more of a social impact and for that to filter through to their investments and to have transparency on how that may be the case. And again, from my perspective, I think that's something where technology can play a really key role. So from our perspective, we are looking at measuring the environmental, social, and governance aspect of all of our portfolios on the basis that we expect that to be something that clients are asking for and demanding to have a better view on over time. So I think that that's something that is more being driven by the millennial generation, but something that isn't very prevalent at the moment, but will become more prevalent over time.
Yes, yeah. So how would technology drive the ESG, environmental impact investing objectives of investors? Why would it be?
Yeah, I mean, look, in a couple of different areas. I think one in terms of measurement. Now, I think one of the challenges in the kind of responsible investing space is there's no clear definitions at the moment in terms of exactly what it means I mean, even in the fund management space, lots of people are saying they're integrating responsible investing into their portfolios, but exactly what that means is highly variable. Now, definitely the role of technology, you can use different data feeds and vendors, for example, to score the portfolios. From our perspective, because we have a large quant element of what we do within Man Group, we develop our own proprietary score to, again, measure the carbon footprint, for example, of different companies, and then to aggregate all of that up and provide, for example, environmental score on the portfolios that we run. And then I think the other role of technology is giving the transparent reporting on that. So from our perspective, it comes through both in terms of being able to measure the RI factors within the portfolio and then being able to report that back to clients as well.
Yeah, okay, I see. Good, thank you. Well, let's move on to the next question, which is about innovations that are improving the client experience. Wealth management companies are embracing technological innovations to improve client experience, innovations such as natural language processing, voice assistants, chatbots, gamification, predictive data analytics, artificial intelligence, and in some cases augmented and virtual reality. So I think, Dominic, I'd like to ask you to kick off this question, answering it. Which innovations do you think are most likely to succeed?
Yeah, thank you, Michael. I think that's a great question because there are many technological innovations that may work for wealth management, and there are some that may not. And sticking to the positive side of that answer, I would definitely say that AI is one of the technology that has a great potential, in my opinion. And of course, AI steals the show these days in terms of webinars and discussions like that. So I will drift to the other part of my answer, speaking about gamification and loyalty in wealth management, because those things I believe have great potential as well. So a couple of days ago on a conference in London, I heard this great perspective from a speaker who said that wealth management is all about rewards. So people are willing to give up their money today just to get more money tomorrow, right? And despite the process being all about returns and rewards, the daily operations, the day-to-day work that is involved in wealth management is really unrewarding. So my concept for technological innovations in wealth management would be to introduce the loyalty and gamification to make this daily boring process a bit more fun. Meaning that when you invest money, you're not only thinking about the potential returns for the future, but on a daily basis, you have to follow the recommendations. You have to check whether market is going up or down. You have to overview your portfolio. You have to take care of everything, basically, even if you are a client with a great advisor. So my concept would be to introduce some micro rewards that the client will be rewarded with when his behavior is effective, right? When he's doing something effective to the portfolio and when he follows the recommendation. Because I believe that it would be so much cooler for a client, even if he had some, let's say, financial health indicator that would point out that his portfolio is close to the model, that he behaves adequately to the recommendations. Therefore, he would know that he's on track to complete this final goal, this final return that he expects like 5 years from now. The other thing is the loyalty, where you can engage your client with some additional perks, like, for example, better rate of returns for deposits, for example. But of course, this gamification is nothing new. It's something that works in other services. So, but it's really not present in wealth management. But I think it will, strengthen the bond between the brand and the customers.
Right. Okay. Thank you, Dominic. Carol, what's your view on the innovations most likely to succeed?
So I would have to say, in full disclosure, I guess I haven't, we don't personally look a lot at some of these things. Chatbots, for example, isn't something that we have looked a lot at in the asset management space. So, David and Dominic probably have a better lens to answer on some of those aspects. I mean, I think, again, the lens that I have is again kind of giving more of a parallel to what we're doing on the asset management side, and again trying to look at where there's potential comparisons. I mean, one thing is there's a lot of hyperbole around a lot of these new technologies and innovations, and frankly, it's easy to get distracted by some of them as well, and frankly, there's also the sense that you don't want to be left behind, and therefore, you probably don't want to be the first mover, but you also don't want to be too far behind, so that if something is successful, then you have a good lens and the ability to move on. I mean, I do think, almost with a consumer hat on, that to some degree there's an element of going back to basics, and that there's similar business model challenges in a way as well, in terms of really trying to use technology and innovation almost to enhance the client experience, like the client onboarding experience, for example, trying to cut out inefficiencies in order to make for a more efficient business model is something certainly that we focus on. And again, I think something that wealth managers will have to focus on, as it becomes more competitive and margins become more intensive. I definitely feel, something that we look at a lot, and I definitely feel that something that can translate into the wealth management space as well is how to use technology to really examine and optimize portfolios. So, we apply a lot of quantitative techniques. We look at different data, for example, and how they can enhance the investment decisions of the portfolio managers. To me, there's a huge scope in that space, which is ultimately how can you deliver the best return for your client. And I think from our perspective, some of the omni-channel approaches are less relevant to us, but what we would take it back to is, if you do your core job of trying to deliver the returns for your client and use technology in a way that can be adopted to that, then that's your best route ultimately to kind of attracting and retaining your end investor.
Okay, thank you. And David?
So I personally believe that even though the chatbot technology is here for a few years already, and it's nothing new, but I personally believe that the chatbot can, if it's very well used, can really help in making some processes much more smooth and natural for our clients. As I said, I observed that even the clients which were very conservative and not very much, let's say, digital and using the different even social media applications. I met one client 2 months ago, a good friend of mine, who a few years ago stated that he would never install any social media app on his phone. When we met, I've seen that he has one of the most popular ones. And I asked him, how come, what changed? And his answer was, you know, David, the only way how can I contact and have some interaction with my grandchildren is just through the social media or the chat platforms. So I do believe that the clients across all the ages, as we already shared, are ready for using the chatbot, and it's for them being more and more natural. And especially comparing to the forms. As you may know, in a private banking, when you are investing, you have a MiFID regulation, and you need to fulfill some kind of MiFID questionnaire in the beginning to understand the client financial situation, investment horizon, and so on and so forth. And what we observed is that this questionnaire, doing this questionnaire in digital form and in user experience like a normal form, where you fill in some information and then you have this button submit at the end, is creating a bit stressful feeling. So psychologically, before you click on the submit button, you typically tend to go again in the beginning of the form and check if all what you filled in is correct, and only then you do this submit. So instead, via chatbot, each question is just simple and smooth chat. So we believe that, for example, for MiFID questionnaire, for a loan application details, or even in the area of concierge, if the chatbot is very well done, can be much more smooth and natural for the clients.
Yeah.
Plus,
Sorry,
plus on top of that, in practice, if you are having your digital application for your client, relationship manager and a chatbot, and there are like free. You have on top of relationship manager another, let's say, digital person, the chatbot, where the communication is very smooth. So this is in area of chatbots.
Right, good. Well, David, I'd like to move on to the next question, and for you to be the first to deal with this one. This is about improving the advisor experience using technology, new technology to improve the advisor experience. Wealth management companies are using innovations in technology to make operational processes easier and faster for advisors. They're using it for prospect management, customer due diligence, account opening, portfolio modeling, and asset allocation. I think Carol mentioned something on portfolio modeling earlier, the use of technology there, order management and reporting. So David, which do you think are the technologies that are most successful at helping advisors become more efficient?
Definitely the technology can help advisors to make sure, and the bank to make sure, that we are in full compliance with all the regulatory aspects. So the MiFID regulation, definitely proper prospect management, portfolio modeling, where the advanced calculations are needed. And in practice, those calculations doesn't need to be shown or explained in detail to the clients, but they can significantly help advisor to prepare the portfolio optimization, to prepare the proper asset allocation in concrete market environment for the client. So these are the areas where we don't see currently the digital, or where we are not focused so much, is the account opening, where we still believe that the first contact with the bank in private banking should be the human touch contact, and also for us to make sure that we handle very well all the KYC procedures. So account opening is something where we do not have currently the focus on. We also believe in AI. AI is very powerful, and AI can be definitely play a significant part in proper filtering of the news filtering of the informations of, let's say, client notification and client bothering during the different market environments. So AI can be used to cluster the client based on the client historical behavior.
Okay, thank you. Carol, which technologies do you think are the most successful at helping advisors improve their efficiency?
Yep. So, I mean, I think from my perspective, we're big believers in the power of data and the power of quant and how that can be used by humans. I guess again, the role of the advisor is a little bit similar to the role of the portfolio managers here, and we philosophically, I guess have one core thing, which is we try to kind of remove or automate away some of the lower value aspects of what the portfolio managers have to do, whether that's on, I mean, I'm not saying they're low value, by the way, but, where maybe more manual aspects in terms of, the client onboarding, historically, some aspects of that have been quite manual, for example, and there's ways that you can automate certain aspects of that. And really what that I think that allows the advisors to do is to focus on, the higher value piece and how can they find ways to really add value to clients. Which kind of takes me back to the portfolio analysis piece and looking at the investments for their clients and trying to use different techniques and data to really extract insights for their clients so that when they do have that human contact and sit down discussions with their clients, then, it's again a more enriched experience. And to me, there's lots of scope to use technology in that space. I think it's an area where lots of people are competing on the client aspect, and you have to do that. But certainly it feels that there's scope to have some differentiation in terms of how can you use data and technology and quantitative techniques to extract insights for your clients on their portfolio and ultimately help them to manage their portfolios better. That's certainly something that we try to apply in our world in the fund management space, trying to, again, give advanced analytics to the portfolio managers and therefore something that I think should translate as well.
Okay, thanks. And Dominic?
Thank you. So, yes, so I would answer with this statement. So basically, when our clients are discussing the new software for their institution, they are usually saying about client experience and the system for the advisor. So I see the big difference here, since the client experience is very popular and no one actually was saying about advisor experience until recently. So my key point is that we should think about advisor experience and we should provide the advisor with a very effective system, the software which would be a foundation for providing new technology just to make the advisor more effective. So I would agree with Carol that data is everything right now in today's world, and the proper system that would not only integrate all of the data for the advisor, but would also gather a lot of data for him just to be used then with new technology. I think that this is like the key solution for making an advisor more effective. So what I would propose here is to use this data that today's system can gather and use it to help the advisor with the repetitive day-to-day tasks that he has to do, like, for example, generating a report, like answering to simple questions from a client, like proposing particular products to new clients' portfolio. And with all of those aspects that I mentioned, these are only examples, of course, AI technology can help your advisors, not like in 5 years from now or 10 years from now, but today in 2020. And I have a great belief in chatbots, which would not only increase the client experience, but would also greatly help to ease the work for advisors, covering those simple tasks that they can do, and the advisor would be able to focus on the more challenging problems. Actually, I've read recently that it was Gartner, I think, who said that in 2020, 85% of all interactions between companies and clients will be done automatically. So I think that I don't have to add anything more to that.
Fascinating stuff. Well, that nicely segues us into our next question about robo advice, because a good example of process automation. If you take automating the client experience or using technology to improve it to its logical extreme, you come to automated advice, robo advisors, which have been around for a few years now. Some people swear by them, some people are not, don't think they're that good, and there's a lot of hype around it. So I was just wondering, and David, I'd like you to answer this question first. What, if anything, can traditional wealth managers learn from robo advisor firms, and should they treat robo advice companies as serious competitors who will continue to take a larger share of the market?
Honestly speaking, we also, prior to implement our robo advisory solution, we definitely have been inspired by existing robo advisors. And what I really adore is the level of simplicity they managed to create as a user experience. So this is something where we try to always repeat to ourselves, let's keep our digital journey for the clients very simple, even though comparing the traditional robo advisors versus the robo advisors within the private banking segment, traditional ones are more focused, or the core portfolio are plain vanilla products. In our case, we have quite a nice portion also of structured products, investment certificates. So it's not easy always to make sure that we are able to keep these complex products simple for the client, and in the same moment to make sure that client gets all the info needed to understand the product. So in this perspective, definitely simplicity is something we are learning and continuously improving our digital journey. So this is the area where I would suggest to all wealth managers to look at robo advisors. I would not comment if they will take a larger share of the market. I don't have here the strong opinion.
Yeah. And Dominic, what's your view on this? And as a sort of sub-question, do you think robo advice just caters to the lower end of the market, the mass affluent, and not the high net worth individuals?
Well, first of all, we all know that robo advisors have been around for a while now, and a couple of years from before, every researcher or analyst would say that robo advice would dominate the market in the future. And after a couple of years, we see that robo advice and robo advisors grow, but not so fast as expected. Therefore, they are struggling with some problems, and I would say that the main problem for robo advisors is the high cost of client acquisition. They just have to spend a lot of money to get some money to their portfolios, because they are not so trustworthy as typical and wealth manager with a great history. So my first advice to robo advisors would be, or to wealth managers would be to that clients are expensive, right? And not lose your clients should be wealth managers' strategy for the next years. And referring to your other question, yes, I think that that robo advisor can fill some blank holes within the offering in terms of wealth management service. And I think that on today's market, there is a place both for robo advisors and traditional wealth managers. And a couple of weeks ago, actually, I had this thing that I wanted to invest some money with one of my banks, and I asked them about the wealth management service. I called them and asked what they can offer me. So the only thing that they could offer was to invite me to the branch and talk face to face, sign some documents, and then they will be able to answer some general question only, not giving me on the actual recommendation, but just having just to have a free conversation. And in that case, I see that they missed my point, and I was disappointed. And of course, a couple of weeks later, my money is still not invested. So the second advice for wealth managers would be that convenience sometimes may be more important than money, at least for some clients group. So I think that what David said is really important, that wealth managers should pay attention at how convenient the robo-advisory service may be and try to introduce those remote services to their high touch offering just to make it more complete, because I still think that robo-advisors are behind wealth managers right now, and it's the wealth manager's role to keep it that way.
Okay, thanks. Carol, what are your views on robo-advice?
I mean, I think there's a couple of areas that are interesting for wealth managers to bear in mind. One, I completely agree with David that the bit that they have done incredibly well is taking something that can be quite complex for people who haven't looked at it before and making it extremely simple in terms of the user experience. So that in itself is something that they have done incredibly well. And as we're building client tools, that's certainly something that we should all look to replicate. The second piece I think that's quite interesting, if you look at robo advisors and how they look to grow, I mean, certainly one thing that they I think are looking more at is the use of building up client profiles and bio data. And, we all leave a digital footprint, and as clients use their site, is trying to get a better view again of the profiles and behaviors of their clients, and then how they can use that information to effectively make their product more compelling in future. I think that, when I look at that space, certainly that's how many are looking to invest in order to grow their product over time. And I think that fundamentally, that's certainly something that can be applied. The more we all understand the profiles and behaviors of our clients, the more that we can adopt the product to suit them. Certainly that's something that applies in our space. And I also think it's definitely something that should apply in the wealth management space as well. So we all have a lot of information on our clients. How can advisors build that into the relationship and enhance the product offering over time?
Yeah. Okay, Carol, thank you very much. We've almost run out of time. We said we'd run this for 45 minutes. We do have a few extra minutes spare. So I'd like to ask our panelists one final question, which is the same for all of them, and to keep their answers succinct, 45 seconds or so, please. And we'll start with David. And the question is this, it's simple, really. We've discussed this topic at length. So what are the most important points you've made that you'd like listeners to remember?
So, as I said, we do believe that private banking should stay high-tech and high-touch service. We believe also that everyone, without looking at the age or different aspects, is ready for digital. It's just important to make sure that you are able to tailor your digital capabilities towards different personalities and behavior of the clients. We believe in chatbots and also AI for proper client clustering and filtering and tailoring the information we are sharing with the client. One part I didn't mention, but I want to put it. I want to share it because this is on top of all functionalities, all interaction and digital we are working on is a data security. The proper data ethics and making sure that you guarantee to your clients the safety of the data is a utmost priority on top of everything, and this is something where we really focus on. And
yeah, cybersecurity, very important. Sorry, carry on, but keep it brief.
And last but not least, sometimes you also need to select the proper partner who is experienced in this field to develop together the great solution.
Good. Dominic, your 45 seconds worth, please.
Sure, I have only 4 points. And first of all, don't be afraid of new technology. Secondly, there are many innovative things that you can do right now, technology-wise, not in the future, but right now. Thirdly, you should explore loyalty and gamification because it may bring great benefits to your business. And finally, I think you should look for competitors, and robo-advisors is one of them, definitely, and copy the best ideas to make the service as convenient as possible.
Thank you, Dominic. That was very succinct. And finally, Carol.
Yeah, I mean, I think our perspective would be that embracing technology is a necessity, not a nice to have in this world, across any industry, frankly. I think we, fundamentally believe, or I fundamentally believe, that it can be a competitive differentiator if truly embraced and done well. I think in this context, doing it well certainly applies both to you know, the actual investments of the clients in addition to the client experience, but ultimately it's really critical that people find a way to have it driven by the end clients and really understand the need of the investors and then how they can adapt to that.
Thank you, Carol, and thank you, everyone. That's all we have time for, I'm afraid. It's been a fascinating discussion. It's been a live broadcast, of course, but it's been recorded as well, and it's going to be uploaded to the Ditto and Comarch website shortly. It's going to be available, therefore, for you to view again if you wish, or to share with your colleagues. That's it. All that remains for me to do is to thank our listeners for listening and to thank our panelists for taking part. So thank you, David Derenick, Dominic Liswa, and Carol Ward. Thank you.
Thank you very much.
Thank you so much. Have a great day, you all.